Building and growing a personal trading account. How many of you right now are still trading solely just off of prop firms, okay? Or how many of you actually got wise and said, hey, I'm making money and I'm consistent trading prop with, funded accounts with the prop firms. And now I have taken funds that from payouts and started my own personal trading account, and you're looking to grow that account as well. Because ultimately that's where the success lies at. Because in the end result, the money you're making is yours. You're not having to pay out a certain percentage to a prop firm organization or business, and then have on the other fees that are involved. Outside, you're really keeping the funds. You got your own account, and you're keeping those funds 100% minus the fees that you're paying commissions and things. But that's what this video is about today, is showing you a simple strategy of trading supply and demand. Because what that is looking for aggressive areas of buying and selling to anyone that's new to trading this style. So, and I'm continuing making videos like this because we have tons of individuals that come in and watch the videos on the daily, which is good because I want to see people become profitable and successful. And I want to show them a means of how they can start their own personal trading account and grow it using a simple strategy. A question I get from time to time is, if the market is moving in a certain direction, whether it's up or down, what tips or advice or tools can we use that will help me stay in the direction or flow of the market? So we'll look at a few examples today. And first and foremost, the market's been in a bear cycle. We should know that, and you should know, if you have any experience in the market, especially trading supply and demand, that we should be looking for pullbacks to key areas of supply. Supply and demand works best when the market is trending in any particular direction, up or down. Okay. So we're going to focus on some things that we can look for in the market that will kind of keep us in the direction, taking trades, whether it's bearish or bullish in a sense. So we're going to look at the chart here in a second. But again, this strategy and how I trade, which a lot of people have found interest in, they're part of my Discord and traded in past prop firm evaluations. And hopefully those individuals now that are successful and proven to themselves that they're consistent have started their own personal accounts. Okay. Again, this is about growing that trading account that you may have with just limited funds. I mean, it doesn't take a lot to be able to do so, but you have to be smart about doing it and be consistent trading each day. I'm not telling anyone to overtrade and then start, taking an excessive number of trades. Limit your number of trades. That's a piece of advice that I gave in a video yesterday. Because what that does is, if you take a losing trade, all right, and maybe you take another trade, but if you take 2 losing trades, be done for the day, okay? If you take 1 good solid trade, then be done for the day. You have to come up with some measure or parameter to allow yourself to be able to be consistent and be successful, because that's how you're going to measure your growth. By revenge trading and over trading, you're not proving anything to yourself. Be consistent with a plan. Put yourself on some type of regimen to where you say, I'm going to take 1 trade a day or 2 trades a day and be done regardless of if I win or lose, okay? Because at the end, it's all about, maintaining our capital, okay? So in looking at the market the last few days, we've seen that we've been on a bear cycle to the downside, okay? Now, this is a higher base chart, my 120 range. I always talk about or preach in the videos that I like to mark up my zones from higher base charts and then move down to a lower base chart to look for the entry. Why? Because trading, the biggest part of it is about confluence. How much confluence do we have? Because that's going to help aid us in the probability of trades that we take. Okay, whether it's going to be a higher probability or lower probability. Of course, there's other factors that come into play when it comes to once we marked off an area and looking to trade a certain setup. What are some things that should fall in place as well? I mark my zones based on if it's mitigated or unmitigated, meaning is there a gap or at the zone or not. If it's not, if there is, if there's a gap at the zone and it's an unmitigated zone, then that makes it a high probability zone. That's one of the key factors I like to see. I also like to see a break of structure because that increases my chances of the trade moving in my direction. So with further ado, let's take a look at the chart. We're noticing the market is running to the downside, right? And I just want to show you an example. We'll take a look at, a couple here. This is a zone that I marked off of my higher base chart. Okay, the 120 range. This was on Friday's trading session around noontime. And I don't like to trade around that time, but these are examples of setups that you'll see. Don't focus in on the time period, focus in on the setup itself. So what I noticed was that, of course, we are bearish to the downside. What does that mean? Continuation of structural breaks to the downside. That's what we're looking for. The flow of the market pulling back, making lower lows and lower highs as it moves lower. We broke structure right here below 752, 19,752 here on the NASDAQ. It breaks structure. When it breaks structure to the downside, okay, for one, all right, and we pull back to a key area of supply that is untested and untapped, that increases the probability of our trade and the chances of moving down in our direction, okay? We're looking for pullbacks to go short because the market is bearish. Now, one thing you can also use, some of you may use SMAs or EMAs, you know, that has that's tied to the momentum of the market, okay? Certain period, you know, moving averages. Okay, so this is the VWAP, the volume weighted average price indicator. Now, I'm not using it to get into a trade with, and it's solely, you know, tell me, hey, get into a trade, Mike, or not get into a trade. No, I'm using it as what we like to call tertiary tools or additional confluence to get into a trade to go short, right? So I mark the zone right here. That's the first thing I'm going to do is mark my zone up. But what I notice is that we're below the VWAP, okay? That's going to increase my chances and my interest of taking this trade. High probability supply setup, below the VWAP, the VWAP as well. Unmitigated zone here, meaning there's a gap back at the zone. If you don't know what I'm talking about when I say gaps or unmitigated zones, watch some of the prior videos. All it is that with the market, when it broke below this area here and created this area of supply to the downside, it didn't immediately come back and tap the lower portion of that last bullish up candle there, that wick of that right there. Like it pulled back and come right here. It pushed lower and then came back. All right, eventually came back. And when it did that, it left a gap right there when it had this aggressive selling to the downside. So when we push back or pull back to this area here, this zone here, I'm going to move down to my lower base chart. I've marked up the zone on the higher base, and then we just move down to a lower base chart to look for the actual setup. We're below the VWAP on the higher time frame or higher base chart, which tells me that we're still bullish to the downside, okay? And because there's some distance in between from where the setup is and the VWAP, it's showing that we still have momentum. There's still force to the downside. Now, this is my 24 range chart, you know. That green box right there, that's that same green box you just seen on the 120 higher base chart. Once we've marked off the zone on the higher base chart, it's just a matter of the market pulling back to the actual zone. Once it does that, we, you know, on the 24 range, on the scaled down chart, then I'm just looking for something to occur, and that something is for a supply setup to occur just as well on the lower base chart. If we look at the 24 lower base chart, we are below the VWAP as well. Now, all we're doing now is looking for a structural break to the downside to give us a key identifier that the market is bearish on the the lower base chart as well. Once it breaks structure on the lower base chart and we get a pull back to a newly defined supply zone, then we're looking to take interest to go short, okay? So if you pay attention here, what takes place here, the market, as it's retracing back to the higher base zone, we look for a structural break to the downside. It breaks below this area here at 19,804, okay? And then, as you see here, there is a supply zone resting right back at this area here, okay? So here we go. So the market breaks structure. There's a supply area resting right here, aggressive selling to the downside where there's a supply zone at. The market pulls back to that zone right there. And all we're doing is looking for the market to show us some bearish momentum to the downside, okay? Where it doesn't break above the area here, meaning break above the supply zone, okay? We're looking for the break and close of a candle below, and once it does break below, we're aiming for the lows of this area here. This is where its liquidity is resting at, right below here at 17,792, okay? Now, you could also be looking for it to take out this area of liquidity right here as well, because when the market came down, it already tested this area of demand right here, okay? It could have rejected, which it did. That's why it rejected when it got right here before pulling back. There was a demand zone resting right here. When it got down here, rejected it, it pulled back. We're going to aim for, once we get the rejection at the supply zone, because we're already looking for a bearish supply trade, we get the breaking and close of the candle. Maybe you got in somewhere around 19,804. Take it on down here to 19,791 and take out liquidity there, and then run this area of liquidity right here at 19,786 as well. So again, if you got in there from maybe 04, 05 to the downside, taking it down here to 86, and it did run a little lower. That's about 20 points right there you could have picked up pretty easy on the NASDAQ, okay? Even if you picked up 10 points, it's still a great run because that would have gave you 10 points from here to the downside, or a little more to the downside below this area of liquidity right here, okay? And if you notice, when it got here and broke below this area of liquidity right here, what did it do? That's a liquidity sweep or grab. The market went back up and then boom, it flushed to the downside. If we look at the higher base chart, where that zone was, it just made sense because this was a pullback to a key area of supply on the higher base chart. And you know, it's once it rejects off the higher base chart and we're still with bearish momentum to the downside, it's going to come to here and run this area of liquidity right here down below, or at least come right here where this area of demand is right here and test this area here at 19,742. Okay, now I'm not telling anyone to take the trade from the higher base chart. I'm saying use multiple chart confluence because that's going to increase the probability of your trade. Higher base, lower base charts giving you multiple confluence there with say for example using the VWAP to where we are under the VWAP, showing us bearish momentum to the downside. You can take trade like that. Now let's look at another example as well. All right, so let's just look at the ES, for example. We can see that the market is moving to the downside. Okay, you see that? The VWAP was right here. Don't pay attention to this white line right here. I was testing something and just kind of back testing some things. But anyways, the market is bearish to the downside. We want to look at July the 17th. We can see the market on the higher base chart on the 60 range chart. I trade range based charts. Okay, guys. So the market broke structure right below here and we were bearish down to the downside. The VWAP, as you can see, each time the market pulled back, it was hugging the VWAP. So we still have bearish momentum to the downside because we broke structure on the higher base chart. Now, if we go down to the 24 range chart and take a look here, we're going to go to the 17th of July. Look what happens here. You see this right here around 10 o'clock, okay? Now, I want to say this, after the market opens up, between 9:30 and 10:30, look for a good solid setup. Anything after 10:30 or 11 o'clock, be very careful because the market likes to reverse. But between 9:30 and 10:30, you're going to find a good setup to the market. Maybe whatever direction is moving is probably still going to move in that intended direction. Now, the market breaks lower, okay? What you see here is a beautiful area of supply where it's unmitigated, okay? Meaning there's a gap. It hasn't been tested yet. When the market gets back to that zone, take a look at what's going on here. It pulls back to this zone right here, okay? We're below the VWAP right here. We were below the VWAP, for example, on the higher base 60 range chart as well. Bearish momentum to the downside because we are still both bearish on the higher base and lower base chart. And we have what we have right here is a supply zone on the higher base chart. We mark it up, okay? Aggressive selling, unmitigated, untapped. Market pulls back to it, and we look for the rejection, all right? Now, if we move down to look for a more refined entry point, that green box right here, we're on the 4-range chart. This is the ES futures, the S&P 500. And if we look what takes place here at the top, so what does it do? Makes a low, lower high, low, lower high. So it's breaking to the downside, right? All right, so what we didn't get on this trade here, for example, even though it did run to the downside here, is a pullback to this area right here, okay? This beautiful area of supply after we made one low, the second lower low, lower high, it didn't pull back to this area right here around 56.70. It came right here. See that? All right. So this was like a break and retest in a sense. I don't trade those. Came back to 56.70. Be mindful around the 70 and 40 pivot levels because the market will reject those. We were below the VWAP here on the lower base chart, but it never came back full on to our actual zone, say for example right here, and it just started breaking to the downside. Now, I prefer for it to come back, be closer to the higher base zone, because I really take my trade from the top end where the original higher base zone was at to go short. Now, as it's moving lower here, as you can see, it does break more structure to the downside below 56.60. And, you know, it eventually does push lower if we look back at the higher base chart here and runs this area below 56.53 and pushes lower, okay? So, again, I like to scale down, and sometimes the market won't pull back all the way on the lower base chart when we mark up our higher base zones. But you could have, again, you know, waited for a structural break to the downside and look for a pullback to continue going lower because, again, the higher base showing us that we're pushing lower, the momentum there, as well as once we get the breaker structure, giving us a directional bias that the market is still pushing lower in a lower base chart and look for a setup that way. Now here's another setup I'll show you right quick on the ES, like right here. I'll mark the zone here. We can see this is another supply area because the market's still below the VWAP, okay? And it created this beautiful area of supply. Aggressive selling here on the ES, again from the 17th. It comes back and taps it right at the London session there, around about on the next day, okay? July the 18th, during the London session, if for anyone that trades during that time. But it does come back and tap that zone. We'll move down now to the lower base chart and show you right quick. Okay. Here we are on the lower base chart right here. This is the 4 range because when it comes to scaling down and looking for interest on the, say for example, on the ES, I like to, look at the higher base 60, maybe move down to 24 to see if there's a zone setup or a zone that we can mark off, and then look down to the, say the 4 range chart to look for an actual setup, in this case here, supply, all right? And if you're looking to go take demand setups, it's just everything in reverse of, all right? The market bullish to the upside, pull back to a key area of supply, of demand on the higher base chart, and then just scaling down to the lower base charts again and looking for breaker structure where there's a demand zone created to take the market going up. In this case here, this blue box right here represents the supply area that I just drew off on these 24 range chart. So we'll move over. Okay, as you can see right here, this is that time period right here where the market taps into it. London session there on the 18th. Blow this up a little bit so you can see it. And in this case here, the market taps into it as it moves lower. We're looking for breaker structure. Really in this area here, this would be what we consider like a minor breaker structure to the downside below here at 56.55. The market comes down, all right, as you can see here, and it doesn't break it until it breaks below this area right here. Breaks, pulls back. This would be the supply area right here that you can mark up. Once you get the break and close of the candle, you can go short. In this case here, once you get the pullback right here to this area, we're aiming for down here, maybe 56, 51. That's liquidity there, and then come down and fill the rest of these gaps right here. I talked about this in prior videos about the market filling in gaps to the downside and possibly even taking out liquidity. But I would aim for liquidity here. So maybe you got in here, I don't know, 53. This is off of a 4 range chart, so you have to be very mindful that the lower you start scaling down on your charts, the moves in account to the number of points or ticks on a lower base chart is going to be smaller, okay? So I would aim for, of course, this low right here, but I'm aiming for it also to fill these gaps and possibly run this area of liquidity down here to the downside at 56, 47 or 48. The market doesn't have those big moves like that on the S&P 500, but the S&P 500 tick value is a lot higher. Well, I should say that it is a lot higher. It's almost 2.5. It is 2.5 times the size of the NASDAQ. So again, this is just moving down to a lower base chart. A lot of people always ask me, can you take the trades directly from the higher base chart once you identify the direction? Say, for example, here on the ES. I mean, that's up to you if you have the capital to be able to weather the storm. But yes, this is a beautiful pullback to a key area of supply on the 24 range chart right here. If you wait for the break and close the candle to take it down here, then yeah, you can do it. Can you do the same here off of the higher base zone markup or chart you mark the zone up off of? Yes. If the market comes back here, again, you have the capital to be able to, weather the storm, because it may have, let's say for example, this one candle right here when it pulled back and tapped the zone from 63 down here to 58. Well, that's 5 points right there. Okay, it's not a lot. So yeah, you could do that just as well. And once you get the break and close of the candle, you're going to aim for this area down here. So yeah, you could do that. I mean, on the ES, but on the NASDAQ, I'd be very careful about doing that, because the fact is that the market has a lot of pullback on the NASDAQ. It could pull back 10, 20 points before it moves in your direction, depending on the charts you're using. That's why definitely on the NASDAQ, I would use the confluence of using multiple charts and trading off of, using a higher base chart to mark my zone, and then moving down to a lower base chart to look for a setup, either a demand or supply setup, because the lower base chart is going to help you get into a more precise entry point in a sense of, but you're also narrowing your stop loss down too, to where you're not taking off of a higher base chart and having a bigger stop loss, if you understand what I'm saying, okay? But this is just a strategy of what I'm talking about and how to trade it using chart confluence, using, tools or that you can use at your disposal. Now, I'm not saying to take trades solely based on, the VWAP or any indicator, because I don't trade off indicators. I'm just, if, people always ask me what that yellow line is there, and it's the VWAP. I'll look at just to see where we are, how the market is moving or performing in reference to the VWAP. Okay, are we below it or above it? And if we are in a bear cycle to the down or upside, then yeah, I'll kind of use it as a basis to say, okay, we're below the VWAP. That gives me more confirmation just as well. But my confirmation primarily comes from a breaker structure. Okay, if we're in a bullish mode to the upside and we got a breaker structure and a pullback to a demand area, or a breaker structure if we're in a bear cycle to the downside, and we have a zone that's the market's pulling back to a key area supply. But looking to see, is it a high probability zone based on, is there a gap, if it's unmitigated or mitigated. If it's mitigated, then that's low probability because there's no gap at the zone. So that's how I use it. But I also use the the volume profile as well. Okay, volume is extremely important when we are at a zone on a higher base chart. See, we're back at the NASDAQ now, the higher base 120 zone or 120 range chart. I'm sorry. It pulls back to the area. I'm looking at the volume profile. Okay, again, this is just, I'm using a tertiary tool or a additional tool to kind of help me gauge the trade. As far as I use the volume profile to let me know, from like a means of a GPS or landmark. If we're above a high volume area, I'm looking to take it to below the high volume area. If we're below a high volume area and we're at a demand setup, then I'm looking to take it back up to the mean or above a high volume area, because the market likes to move in cycles from a high volume area down to through a low volume area. So if the market is moving to the downside and it breaks through a high volume area, okay, and you see low volume area, typically it's going to move from a high volume down to a low volume. So in this case here, it pulls back to this high volume area, slightly right above the edge, okay, the ridge of this high volume area right here, not right up here, but we're below the VWAP, say for example 2 as well, to a high probability unmitigated zone here on the 120 range chart. I moved down to my 24 range chart, and then what I did was draw up a micro tool here. That higher base, that green zone, that green box is that higher base 120 range supply zone. But if we look at the zone off of the 24 range, when it broke structure right here to the downside and came back to that zone, if we look here, you see the market pull back to the zone right there. Where is it at? When it pulls back to the actual zone here, we're approaching back to a high volume area. Again, high volume back down to maybe a low volume area. So I like to take my trades slightly above a high volume area, okay, and then using confirmation as well with confluence. Again, on the lower base chart here, we've got a unmitigated untapped zone right here, okay, that lighter, smaller box right there. I drew up this small profile here. If we look over here to the right hand side here, using the composite profile, you can see that when the market pulled back to the actual zone, we're above a high volume area. If I do this micro range profile, we're like slightly above or right at a peak here, where we were like right on the outer edge of it. Again, I'm not using it to tell me to get into a trade. I'm just using it as a means of where to get into a trade and use it as confluence just as well. And then if I draw this area here, you see this VPOC area here. So, it's just some tools that you can use at your disposal to help you get into a trade that's more solid, more confluence to get you into a trade that's going to work out more in your favor, okay? So we're talking about, again, looking to see high probability zones, mark them up off the higher base chart. Move down to the lower base. Well, before we do that, the higher base zone that we mark off is unmitigated or mitigated, meaning we have a gap or not gap. Moving down to the lower base chart, looking for a structural break. Market pulls back to a key zone. Is there a gap or is there not a gap at that zone? And then you can use some tools like the VWAP to see, are we moving to the downside and the market pulling back and we're still below the VWAP, and then maybe using the volume profile as well. All these things come together to help you at your disposed, to be disposable to you, to increase the trade of working out more so in your favor. Again, trading is all about high probability setups and confluence. The more confluence, the better the trade is going to work out for you. And this is how we go about building a personal trading account, growing it, okay, so that we can be consistent and be profitable and do this thing as a full-time career. Understand that. And the better you become at doing it, you'll start to see more growth in your trading and yourself, okay? And then you'll know that you become from a beginner to an intermediate to more of a professional trader, and you'll see the consistency start to unfold for yourself. So if you're anyone out there that's watching, you're a beginner trader and you are past your evaluations or your funded accounts, start taking money and putting it into a personal account. Okay, you don't got to start trading that personal account tomorrow, but start slowly building that account up. All right, don't take the money straight from the prop firms, whatever the case is, and just blow it on whatever. It's about compounding and growing your own account, because you don't know tomorrow how long or next week or next month that company that is in business of as a means of a prop firm is going to be around. All right, we've seen some fold up already, and we see things that are going on just in the media, and you hear about probably through other traders, and you guys probably watch other videos about certain prop firms that are just like always changing the rules and the policies, and maybe they're in financial trouble. We don't know, but you don't want to be putting all your eggs in one basket and then you're not able to take a payout. Be smart about things, okay? So if you're first time viewer to the channel right now, you found value in today's video, please take the time to go ahead and click on that sub button right now. Become a member and part of the team here. I've got tons of valuable content just as well as I discussed today on the channel. So, please do so by clicking on the sub button, but also turn your post notifications on so you do not miss one of the uploads. Now, if you're someone that's interested in becoming an elite member, and people always DM me, and maybe you're saying, hey, what's it get ready to say? This is where you can gain access to the actual breakdowns of my trades that I take, ones that I post on the Discord. There's a private community. It's called the Elite Membership or Elite Channel Supporter Membership tier. It's a tier-based program through YouTube, and all you're doing is supporting my efforts as a content creator. You'll find that link down in the description portion of the video. You'll get the trade breakdowns where I talk about profit target areas, stop losses, the strategy in detail, why I took that setup, so that you can grasp a better understanding of the setups that I'm taking, okay? The more you watch those videos, the more you'll be able to fine-tune yourself in your own trading and watch your own consistency of your trading grow, okay? So, but again, I'm not promising anything to anyone, because you have to be, trading is not for everybody, and it's a risky business, but if you spend time educating yourself, you should start to show some growth and start to show some consistency and profitability, okay? So that link is down in the description portion of the video, right below the Discord link. If you're interested in joining the Discord, it's free, but there's 2 links down in the description. Discord 1 to the Elite Channel Supporter Membership. Once you click on the Elite Channel Supporter Membership link, you'll see 2 tiers pop up. Make sure you choose the one for $6.99 a month, and you'll gain access to that private group of links and videos, okay? But outside of that, if you found value in today's video, please drop a like on the video. I'd appreciate it, and see everyone in the next video. We got another trading week coming up ahead of us. Wish everyone a very prosperous and profitable week ahead.